Hello friends and welcome to my YouTube channel Simply Stocks, and today it is the question answer session time. So let's just answer all the questions from the viewers, and I did not put up a question answer session last week, so there are many that are coming up. So let's get started quickly. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. For the question answer session, let's just talk about the Nifty because it has moved up even higher and it keeps breaking new highs, and we are now looking at 12,500 levels. But again, I want to caution all the retail investors that currently the Nifty is trading at 28 and a half times current EPS of 435 rupees. That is after the tax cut. So the tax cut was brought in to increase the EPS of all the companies of the Nifty because of the higher taxes that they were paying. So lower taxes meant higher profitability, higher EPS, and hence the EPS has fallen from around 400 rupees to 435 rupees for FY 20, and even when the slowdown is taking place, the EPS has gone higher, and so rather than Nifty looking at a P of 30, it is at 28 and a half. But even at 28 and a half, the Nifty EPS is very expensive because in 2008 January, when the great fall happened because of the US financial crisis and all that. Post 4th January 2008, the fall happened from around 28 levels on the PE level on the index. So one has to be really careful about 2020. It feels like a bubble forming in some large cap stocks, and we know all about those. I mean, four or five mega cap stocks are just running like anything at the moment. So we could see massive market correction. By massive market correction, I mean around 18 to 20% Nifty correction over the next year and a half. And that could be extremely painful for retail investors if they get into these expensive stocks. At least there is consolidation on the annual, and I'm not confident about the same kind of move as we have seen in the Nifty this year. So one has to be really careful in buying Nifty stocks. I still believe small and mid caps will do well. Small caps is at 13,500 after falling from 20,200 to all the way to, I think, around 12,500 or so. So not moved up a lot, and I believe that next year could be of small and mid cap. Now the questions from the viewers, and there are many that have come in, at least, I mean, around 20, 15, 20 odd questions that have come in. So let's take it one by one. This is a question that came in 2 weeks ago. On 12th of December, Ceylon Exploration has crossed all the resistances levels and made a high of 148. What do you think about it? Do you think it is a buy, Udit Rekame? Well, I believed at around 130, 135 it was a good buy. Now the stock has gone past all levels and it has closed at 158, 159 levels on Friday. I think this is a very good opportunity to add on to Ceylon exploration if you are a trader, and we could see levels of 200 to 10 coming in the next 2 to 3 months. I think this move will sustain over a period of time, but again, do not invest into such companies unless the numbers change. So the numbers would come in sometime in February, mid February. So wait for that, otherwise you can trade with a stop loss. Now, there's a question that has come in from Venkat Narasimha. The question is, please make a video on the future prospects of Ashoka Buildcon. Surely, I'll make a video on Ashoka Buildcon in the coming months. I have made a video on Ashoka Buildcon earlier, but that was more than a year back. So it's time to make one more. So there are many videos that are lined up, and I cannot promise you immediate that the video would come in, but over the next 3 weeks to a month you'll see the video. What was the best price of HDFC Life to invest for long term? Asked Sridhar. I believe around 520, 530 is a very good level to buy HDFC Life, but again, standard disclaimer apply. and please consult your financial advisor. But I think around 520-ish level, if the stock falls or below 500, these are very good levels to buy and a very good stock to buy for longer period of time. And the next question comes in from Dr. Prasanna Saru. Will pharma sector show revival in 2020? If yes, then which scripts to look for 2 to 3 years horizon? I believe pharma, select pharma may show some resilience in next year. In fact, I believe that because of the fall in these companies, we could see buying in pharma and IT. But I think IT has run up a lot, so IT may not see the same kind of buying in Infosys and TCS. Maybe mid cap IT would do well. In pharma, I believe good mid cap pharma companies would do well. So look for nice balance sheet, zero debt, and without any FTA. There are no problems of FTA. Those kind of pharma companies which are in the range of around 10,000 to 25,000 crore market cap may do well, but you have to be careful. Let the sector come out of the troubles and let the sector do well for a couple of weeks and then get into such stocks. I cannot specify stocks because the sector itself is so complicated that I don't look at it uh, with a great deal of you can say attraction because I believe the US FDA clampdown could happen any day in any stock. So may I seek your suggestion about the growth prospects of L&T, Polycab, and Titan? So let's take it one by one for a 5 year view. This question has come in, and so let's answer this. L&T, for an instance, is a good company on corrections, so it has also run up probably when the market falls, and I believe it will fall sometime in the first half of 2020. You can buy gradually into L&T, but it hasn't performed that magnificently as other stocks like Reliance, etc. And L&T will only perform only when the uh, the economic cycle turns, as well as when the private capex turns around. And instead of private capex, people are shutting down many plants. So it is a very good time to invest into L&T because the move has not begun yet. The move that everybody is waiting for the last 10 years. Probably it could happen next year or a year after. So you can gradually buy into L&T on every dips and on current levels for the next couple of years and hope for a revival. But again, this all depends on an economic revival and private capex coming back into picture in India. And I do not buy shares on hope. I have done that before and really taken a bitter pill in many of the companies in which there were expectations of a turnaround, in many of the sectors in which there were expectations of a turnaround, but the turnaround did not happen. So I believe you can buy into L&T, but do not have a lot of hope over the next couple of years. Polycab is again another company that has done well as a stock, but again, it is economy driven, and when there is more real estate work that is done, more infrastructure work that is done, Polycab would do well. So take that into consideration. About Titan, I believe that the valuations are very expensive. I'm going to put up a video on Titan as to when to buy Titan, just like I put up a video on Bata, etc. So keep that um, in mind. I think the valuations are expensive in Titan. When the gold prices settle down and comes down a bit, the Titan would fall, and when the market will fall, Titan would also fall because this have been a marquee stock over the last couple of years. So I believe that avoid Titan for the moment, but any 15-20% correction from these levels will be a very good buying opportunity for long term. So next question that have come in is from Mukund Mahapatra. What about the prospects of tube investments and Ashok Leyland going forward? A Tube Investment is a very good company to invest into infrastructure, etc. But again, wait for the market decline to complete. We could see some amount of decline in small and mid cap, not huge, but a little bit of correction. Look at the results of Tube Investments and such companies which are into infrastructure, and then get into it. About Ashok Leyland, I have put up a video already that it could go to 20 odd levels. It has already run up a lot. I feel there could be one more bout of correction next year in all auto ancillary stocks, and that is going to break the back of many retail investors because they would think that, oh, now auto ancillary is doomed and so on and so forth. The run up has come in without any much of a numbers that could turn around in the auto pack. Yes, the bottom might have been formed in terms of sales, etc., but next year could be extremely tough for autos and auto ancillary. I believe there could be an easy 25-30% correction in Ashok Leyland. I stick by that, but take your own decision, consult your financial advisor. Uh, the next question that had come in from is Jayesh Chanchia, and he says that please make a video on public sector bank, SBI, UCO Bank, and others, and the aviation sector. Let's take the aviation sector first. I believe that Interglobe Aviation is the only stock that you could even look at investing because of its pedigree, management, and everything. Although there have been management issues with Interglobe Aviation, but in my opinion, I avoid aviation sector altogether. If you want to really invest into aviation, you have to look at ATF prices, oil prices, etc. as well, because there are many things that go out. It's not just about people shifting from trains to aviation. Now we have a stock that could play. You can play the game of the railway sector as well with just one stock, IRCTC. So I think IRCTC is a much better bet than the aviation stocks altogether because of the kind of reach that the company has. And I think over the next 8 to 10 years, railways would still remain as number one way of transport for people across India rather than aviation. Yes, there have been a move towards aviation, but when the ATF prices go up, oil prices go up, it is going to take a hit. I still believe that the aviation sector itself is a more commodity driven sector rather than anything else. So keep that in mind. About the public sector banks, well, the kind of loans that they give, and I can say it for all companies, all stocks. Uh, I stay away from such companies because yes, SBI could do well for 1 year, 2 years, but then one news or one NPA, one big company going down or a promoter going down could really hurt SBI, and they could have given a loan to another Vijay Mallya, to another Nirav Modi or someone else, and that could hurt the company or that could just jeopardize your investment. So yes, invest into such stocks, but a little bit, because I still believe public sector banks would always do well. And consider this thing that when you go into a bank, compared to an SBI or a Punjab National Bank, if you go into a private bank like HDFC, etc., you will see the difference in terms of the way they cater the individuals, the normal individuals who have just a savings bank account and just need to do uh, similar services like putting in a check or about any issues about payments, etc. So this is why I believe that there would be a shift of consumers who learn more towards public sector banks, sorry, private sector banks rather than the government banks. So keep that all into consideration before investing into public sector banks. Yes, you can trade into them, but I do not think you can invest between 6 to 10 years into public sector banks. Now, there's a question that has come in from Jay Chanchia again, that your advice on Interglobe Aviation against SpiceJet. I have just explained about the aviation sector, so kindly take that as the reply. Is HUL a good stock at current levels and also recent acquisitions of GSK? HUL has always remained a very good stock, and I invested into HUL at around 400 rupees and I sold it off at 600, 650 as a trade that did well for 6 months, and then never got an opportunity to buy it. So I must confess that uh, I believe that there could be a correction in HUL similar to what we'll see in Bata, in Titan, in Reliance, etc. keep that in mind. Wait for that kind of a correction, consolidation in the stock before buying into it. But yes, HUL could be one of the top picks to buy for a 15-20 year portfolio if you do not want to take a lot of risk, if you don't want to get into mid caps. Buy large caps on heavy declines. Buy these mega caps, buy Reliance, buy HUL on heavy declines when the market falls. Now there's a question about Shipping Corporation of India by Sambit Priyadarshi Panda. Well, because of the issue of government selling stake into many government companies like Shipping Corporation of India and BHEL, etc., BEL, BEML, and so on and so forth. I don't know about the last two, but there are talks of selling stake divestment into it. Yes, these stocks would run up, and if even if the divestment takes place not in 2020 but in 20, by FY21, we could see these companies go up pretty sharply over the next year and a half. So take that into consideration. But again, these are all speculations. If the divestment doesn't take place, then the stock would come back to the same levels, and same is the proposition with Coal India. So take that into consideration before investing. I more or less believe that you invest into companies looking at the fundamentals of the company and the business and the sector itself, which I feel is not that great for shipping companies at the moment, because they are into a lot of debt, and these are capex oriented stocks. These are companies which really do well when the global economy does extremely well. So these are the last companies that would go up and go up very sharply, like Aban Offshore, Ceylon, and Shipping Corporation, and so on and so forth, Cochin Shipyards. They would do well when the global economy is running like a train at 4 5%, which it was doing in 2004 to 7 period. But at the moment when the global economy is slowing down and probably stalling, and the Indian economy is doing the same, I do not think that it's a good time to invest. Yes, if you can play the divestment card well and make good amount of money, good luck to you. But I am not a person who can do that well. I've tried it and failed at it, and so I won't suggest that. The next question comes in from Om Prakash. How to compare a stock to another stock from different sector? Now, this is extremely interesting. Excite to Kajaria, and this has given me another avenue to make a video, and I'll try to make a video on this by next weekend, because this is a very interesting question that has come in from Om Prakash, and this is something which, if one can crack, can really crack the motto of the markets itself. Uh, so, if you have a couple of companies that are trading at the same PE, but they are in different sectors, how do you compare them? For instance, do you want if you want to compare something like a Maruti to an L&T, how do you do that? Well, first of all, you have to take the sector into picture. So if the sector is doing well, if both sectors are doing well, then you move to the next part. If one of the sectors are doing well, the other is not, then you just omit the other company and you will go with the one in which the sector is doing well. That is one thing. Second would be, when I have put up a video on finding the multi-bagger stocks, you can go ahead and watch that video. And in that, I have said that you have to look at moat, longevity, and the business perspective, as well as the management and the profitability of the company, and how good the profitability will be for the next 8-10 years. So take these into consideration before buying into any company, and these remain stable in all the companies. So, Om Prakash ji, what you look at is the moat of the business in both the companies. For example, if you are comparing Maruti to something like what do you say, L&T. So the moat is more in Maruti than compared to L&T, because of the kind of you can say market it has over the next 10 years. Same if you compare Maruti with L&T in terms of return ratios, then you'll come to know it. Return ratios of the sector compared to the company, and return ratios of the company compared to the other company. You have to do both the things. I'll put up a detailed video on how to compare it and what I think is the best way to compare such companies by Saturday, so you'll get a better idea. Uh, Now, there's a question that have come in from Mathivanan, and he asked that Motherson Sumi, is it a multi-bagger? I think it is from these levels, anywhere between 130, 140 levels or below that, very good levels to buy it. Not quite a 6, 7 bagger, but at least three times from here it can easily go once the auto sector revive. And I believe that over the next 1.5 years to 2 years, auto sector will come back into picture. So what you can do is, if you want to invest in Motherson Sumi, invest over the next 18, 20 months. So if you have, say, around 2 lakh to invest, then you invest around 10,000 rupees. Yes, 10,000 rupees per month into Motherson Sumi every month from here on in, without looking at prices, and then keep the stock for another 3 years. So you invest for the first 2 years and keep it for the next 3 years. So that's a 5 year period. Probably you'll easily get 360, 370 levels, but standard disclaimer apply. Then there's a query that's coming from Venkata Kalirindi, and the question is about Coromandel International. Can I make a video on Coromandel International? Uh, Interestingly, I have made videos on financial companies, on NBFCs, etc. And the same goes with Coromandel. And why I avoid making videos on financials is that I do not like financials at all post what has happened in US in 2008-9. And I have a feeling that there could be some kind of a bubble that is taking place in NBFCs and financials, and we have seen that happen with the Yes Bank, with the DHFL, as to what can go wrong when the lending spree continues, and there's unabated, unsecured lending that take place, and you don't have anywhere to come back from. So I have my opinion is, avoid such companies if you have not bought into it. Hold it if you're making good money into it with a stop loss, and if you're making losses into such companies, NBFCs, etc., then you have a stop loss placed and abide by it, because I still feel that there is an HDFC Bank, there is an HDFC AMC, and a Bajaj Finance. There are only three, four companies in the financial sector altogether that have done appreciably well year on year against all odds. But otherwise, all financials have done badly over a period of 18, 20 years. And you've seen that even banks, yes, private banks have done well, but even in private banks only a few have done well. We have seen what has happened with ICICI Bank with the Chandar Kochar issue over the last 3, 4 years, and only now in the last 6, 8 months ICICI Bank has done well. So you really don't know when something will hit you in financials, similar to what could happen in pharma sector. So keep that in consideration while you invest in such companies. So the question that has come in is from Parmar Hitesh, and he says that he has invested 8% of his portfolio in average industry, and it is down 32%. It is a good stock to invest in. It is into real estate, and that is why the fall is taking place. Uh, Keep patience. If you're down 32%, do not buy into the stock. Probably what you can do is just hold on to it, and you should be having patience for the sector to revive. Uh, I cannot say when it will revive. It is not the favorite sector of mine that would do well over the next 4, 5 years. But yes, there could be some revival, there could be some pop up. So if you get your price or close to your price, anywhere 10% closer to your price, exit such companies and buy into solid managements with good balance sheet and a moat. They will always perform well compared to such companies. Now, another question that has come in is, share videos on IPOs too, like Prince Pipes, SBI cards, etc. Well, yes, for sure, this is a very good idea, and I'll do that. But I don't get much time to analyze IPOs that much because of my work schedule, etc. But if I get, I'll definitely put up videos on IPO for sure. Castrol India, view on Castrol India, Ujjwal Talwar. Well, Castrol India will always do well when the oil prices are going up. So keep that in mind. So you have to take that into consideration for buying into such companies. It is oil driven, oil prices driven company. Yes, the dividend yield is pretty good, so you can buy into it. It is a stable company, but do not expect multi-bagger returns in such a company. Now there's a lot of requests that has come in for Aarti industry, not quite from Suman Saha, only from Suman Saha, many others. And I have a feeling, actually, I know that I have made a video on Aarti industry a few weeks back. So go ahead and look at my videos tab in my channel, and you'll see Aarti industry in there. And I've said that it is a very good buy at these levels. So go ahead and watch that complete video, and you'll get a very good idea as to what I believe about Aarti industry. Can you compare Bata with Relaxo footwear? Yeah, my answer to that is, can you compare Maruti with, say, Tata Motors? Still, Maruti sells the most cars and not Tata. Over Maruti with any other brand, Volkswagen, etc. It's always Maruti. So if there are 10 cars that are being sold, seven, I think 7 to 8 cars are Maruti, and then come the next and rest. So keep that into mind, that do not fall into the trap of finding the next best company in the sector, because there's no guarantee that will do well, although the best company in that sector would do extremely well. So don't try to catch the thing that okay, there is a valuation gap, and the valuation gap would surface if Bata is trading at 58 times, Relaxo would also trade at 50, 55 times. This will never happen, and this has never happened over the last 100 years into any stock market. Companies that have been market leaders have always commanded higher PE compared to other companies. You look at DMart, to other, you can say, companies which have malls, etc., Future Group, and so on and so forth, and look at the difference or the gap in the type of PE that they command. And this is more or less because of the viewers, or the investors' perspective, that they are very sure of companies like Bata, HUL, Reliance, and Maruti, and they are not quite sure of companies which are second rung to these companies like Relaxo, ONGC, and so on and so forth. If we take into, say, Maruti, then there's Tata Motors also that is listed. But so keep that in mind. If you have bought Relax and you're making good money, keep a stop loss and exit that, and probably buy Bata on declines. Buy always the leaders in the pack in order to make a lot of money, rather than buying second or third run companies. So avoid Relaxo footwears if you've not bought, and buy Bata on major declines. I've already explained that there could be a 15-20% decline coming in the first half of next year, and probably get into Bata at those levels. Please analyze Mirza International by Shivam Srivastava. I have the same answer as I've given for the previous question for you, Mr. Shivam. Get into the major companies of those sectors rather than second or third run companies into their sector. What is your view on Dishman Pharma? Is being asked by Shiva Kumari. I believe it is a very good company to invest in. In fact, now Dishman Pharma has become, I think, Carburetive, or some other company. The name has changed. So, but again, if it has not gone through any US FDA problems over the last 1 year, because I don't know about it, I have not gone through many pharma stocks over lately over the last 1 year. So kindly keep that into consideration. If the numbers are stable, you can definitely invest into Dishman Pharma. Uh, Army K has asked that he has bought BPCL at 498. What should he do? That is a relatively expensive price, but again, you have fallen into the trap of the movement in BPCL that we have seen over the last 1.5 years, and this is because of the divestment plans of the government. Probably you can buy on decline. So heavy declines in BPCL is a very good levels to buy into companies 430, 420, or around 375 to 400 levels. If you're lucky, keep on buying, and probably it'll give you a lot of good return over the next 6 to 8 years, rather than just looking at a year or 2 years time frame. You should look at a bigger picture. So invest over the next 2 to 3 years, buying a little bit of BPCL, just like you have done right now, and then sell it. If you have bought it and you cannot buy more, then do not buy at these levels. Average at very low levels, and probably you'll have the money after 2 3 months if you are earning. And probably average it and then exit at a higher level after 2 to 3 years. That could be another strategy. Uh, then Tarunendra Tiwari has asked that please suggest that can I invest in Bajaj Finance Index for 25 years? So yes, you can, but again, Bajaj Finance has done well over the last 8 to 10 years. It is a private company that is into lending, similar to other companies that lend. So don't take your eye off such things. So anything that bad could happen to the economy may hurt Bajaj Finance big time. If this problem of unemployment and problem of lower jobs in India continue, then there could be defaulters on Bajaj Finance as well, and their business may get hurt. It is a very sound management, and that's why I believe nothing could go wrong in the company for now. But things can change very quickly. Similar was the case with many other companies earlier. I'm not doubting Bajaj Finance management, but I'm saying that you cannot perennially invest in such financial companies rather than or compared to any pure consumption company. So yes, you can invest into Bajaj Finance, but I would not advise you to invest in Bajaj Finance on dips for the next 25 years at these levels. So this was my video on the current question and answer session, and probably one should be aware of the fact that there are many sectors that you can invest into, and I want to just focus on one thing, that which is the best sector to invest at the moment. So I believe that over the next 15 years, the AMC insurance sectors would do well. Any kind of insurance sector would do well over the next 20 years. Any kind of dip in SBI Life, HDFC Life, HDFC AMC, SBI cards, and so on and so forth. Any of these insurance from ICICI Lombard and many others, keep on buying those companies. These are very good times to buy such companies on any decline. So keep that in consideration. That is my firm opinion. Over the next 20 years, that could be a big sector along with consumption that would do well in India. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.